Good afternoon, everybody. Welcome, welcome. Hopefully everyone had a great trading morning. Plenty of opportunities on the markets today. But you know, patience definitely had a part of it. You got to make sure to stay on that patience wagon so that you're you're taking the right setups at the right time. Now, before we jump on in, as always, for some reason I accidentally closed the page here. Give me 1 second. Right as soon as I started, accidentally closed the page. It's good. Good start. All right. As always, swing on over to slingshotfutures.com, scroll down, and click on the Join the Daily Outlook newsletter. The Daily Outlook newsletter has gone through a revamp. It is a new kind of layout, a new look to it. It's going to include pretty much everything that we don't talk about here, so there's no overlap or anything like that. So make sure to sign up for that if you haven't done so already, so that you don't miss anything important. Of course, along with that, click on the live trade room subscription and trial info where you can sign up for a free 3-day trial in the room, and that way you can kind of see what we're all about. You can hang out with us, ask some questions, have some fun with us, see how we're trading, how we approach the markets, and all kinds of good stuff. So make sure to sign up for that if you haven't done so already, so you don't miss anything there either, to maybe catch a potential good trade here and there. Now, looking at, firstly, the news. We want to know what's going on for tomorrow. And really the big thing when I'm looking at the news, I want to know, not necessarily the small stuff. I really don't care about the small stuff. I want to know what the big stuff is. What are the things that are going to move the markets? And when I'm looking at the news tomorrow, the news calendar is pretty sparse. There's not a whole lot to keep things bumping around. If we look at the news calendar tomorrow morning at 4:30 out of the UK, we have the average earnings index plus bonuses for April forecasted at 2.5%. At 4:30 as well, we have the climate count change for May forecasted at 11.3K. Previous is 31.2K. So we do have some UK news coming out. It seems kind of 50-50. Sometimes that news really shoves the market around. Other times it does absolutely nothing. Have to kind of wait and see. At 5 o'clock out of Germany, we have the ZEW economic sentiment for June forecasted at negative 14.6. The previous is negative 8.2. And then at 8:30 for the U.S., finally, we have core CPI month over month for May forecasted at 0.1%, which is unchanged from the previous. That's it. We don't have any large news aside from that, so that's really all that we have to keep our eyes on for tomorrow. And it could be a good thing, could be a bad thing. Today didn't have any news, so the fact that we have something going on tomorrow, kind of a good thing as far as I'm concerned. But, I mean, to be fair, today moved really well. Maybe we don't want any news. I don't know. We'll wait and see. But tomorrow at 8:30 is the one that I'm going to care about. It's a CPI for May forecasted at 0.1%. Now, looking at the markets. Boy, oh boy, oh boy. Well, let's start off with the euro. The euro so far has been kind of ping-ponging around here for the last, 8 to 16 hours. It's not really going anywhere right now. And there's a lot of overlap, and we can see that right there, stacked up on top of one another. They're trying to make a decision. The big thing that stands out to me on the euro is simply the fact that we keep missing the highs, right? Every time the market tries to go up to test those highs of the channel, it fails. It just misses it. We missed it over here. We missed it up here. We even, I guess if you want to call it a peak, we kind of missed it there. And now we're really missing it over here. So that said, the market's still coming down to the lows of the channel and bouncing back up. So that gives us a little bit of a clue that the buyers are obviously buying when it dips, but they're not hanging on for big rips. They're getting out ahead of objectives, right? They're getting out before it comes to the channel high, before it comes to the channel high, before it comes to the channel high at previous levels of resistance. Now, we do have resistance on the euro at 18,270. That is the nearest level of resistance, and it's still valid. They actually missed it. You'll notice this candle came up and it looks like it tested it. Actually missed it by one tick. So that level is still there at 18,270. We do have resistance further up at 18,450, which has been proven. And really kind of the thing that I want to see here, if the market does go back up again, it's looking a little bit less likely, but if it does go back up again, I'm looking for resistance at 18,520 up to 18,805. That's kind of the zone that I want to look for sellers to try to push into and then push the market back out of, kind of chuck it to the downside so we can start running into some other levels of interest. On the other side of things, because the buyers are looking fairly weak, if the market does start rolling over and coming down a bit, we have a situation where at 17,315 is the next major level of support that we're looking for on the downside if we can start cracking through this channel low. Now again, although the channel itself doesn't fit that well, the lows are still pretty strong. Every time it dips down, the buyers are buying it back up again. So we need to get the market underneath this to get continuation until we can really have some emphasis on the sell side. Which leaves us in the situation where we are right now, which is right in the middle. We're not breaking down, but we're not breaking up, we're just stuck. And that means that we're sitting on hands and we're waiting for the correct opportune time to jump into the euro to really cause one of these larger moves. And right now, we're just not seeing it. I do like the bear side a little bit more, but, well, the sellers are having a hard time. They're not able to follow through just yet, and we might just have to wait for that to happen before we can really get the ball rolling. So for right now on the euro, I'm sitting on hands. We have a plan if it goes up. We have a plan if it goes down. It's just right now we're stuck in the middle. So we'll come back to it when it decides to, actually move around a little bit. Oh, and before I forget on the euro, we do have a new level of support forming here. We've got a new level of support forming at 17,645. There we go. Perfect. All right, over on gold. Gold is... gold makes me want to drink caffeine just looking at it. It's totally dead. There's no movement. There's just nothing happening. I mean, this chart could easily be confused for a 5-minute chart if you ignore the time scale at the bottom and the price scale. I mean, it's really chopped up. It's hung up on itself. It's not getting anywhere. And, you know, we do have some nice levels of resistance, but that said, you know, we're not really getting anywhere. Every time it tries to go up, it fails. Every time it tries to go down, it fails. We're just flat in a range. And this range has been the case for a while. Yeah, I mean, look at the overall range here. We had a nice breakdown, and then it went sideways for about 10 days. We had a break up, and then it went sideways for about 10 days or so. We had a breakdown, and that went sideways for maybe 7 days. And we had a quick snap up, and now we've been going range bound for about 10 days. We keep getting stuck in these areas. Eventually, there is going to be a breakout move. That's what we're seeing, right? We had a nice breakdown over here. Nice rally here. We had a nice breakdown there. Nice breakdown here. Small little rally there. Eventually, we're going to get a breakout of this range. But it's tough because we're floating right on top of that big 1300 level. And I think that's where a lot of this congestion is coming from. All the other levels of support and resistance are fine and dandy, but when it boils down to 1300 on golds, we're stuck. We can't go down. We can't go up until we get away from this. And until we do, well, we're just stuck in a range. So the game plan, fade. We're looking to fade. Fade the highs, fade the lows, fade everything in between. Slight emphasis on the bear side, though, for now. And the reason I say for now is because we are forming higher lows. We do not have a higher high yet. So if this does want to pump higher, we might be gearing up for an attempted trend reversal. Trend reversals, low probability, right? I'm not anticipating that actually occurring, but if it does, we want to have a game plan. Really, the big thing, I'm looking to fade the highs. I want to sell the highs above this, sell the highs above here, sell the big orange level here at 1310.1. Doesn't really matter. I'm looking for a push up into resistance so we can dive the market back down again. If it does want to poke its head down, support areas for bouncing are totally fine, but because this does have a bear bias, generally speaking, when you're going against that bias, you want to give it an offset. Now, what do I mean by an offset? Well, I mean if you were to look at a level of support here, and that's, you know, a downside bias, which gold does have, I don't want to buy right there. I would rather buy underneath it a little bit because the anticipation is that the market will slide through a little bit before respecting it. And that's what we've been seeing so far. Same thing down here. We have a beautiful swing low, but it slid through it a little bit. We have a beautiful swing low, but it slid through it a little bit. If we look on the resistance, there's almost no slide at all because it's a bear market. So if it does break down, I'm looking for a slight offset on the low to kind of pick up a little bit on the, you know, a little bit of a buffer and then bounce it back up. On the sell side, though, a little bit more strict on the sell side, just because, well, that's the direction it's going. So right now, it's stuck smack in the middle, not looking to do anything. But if it does want to start kicking off, we do have a couple areas of interest. The first area, and I kind of want to mark this in a different, mark this in a less dense of an orange line here. So instead of 5, we'll go for 3. We'll make it dash dot. So we're looking for a small level of resistance at 7.8, and if it does want to break down, we're looking for a low at 97.8. But wait, right? Offsetting it, 6.8. Right? Give it a little bit of an offset on the low, assuming that it will break down just a little bit. That's going to be at 96.8. So we have resistance above at 7.8 and support below at 96.8. Of course, we do have the big round number at 1300 in the way, which will probably cause some problems. And we have minor support forming at 99.5. So there's a lot of different places that we can look to jump on in if there's an opportune time. But right now, we're just in the middle. So we just got to wait until it rises or falls into one of those zones. That's about it for that. Over on crude oil finding a little bit of a bull bump here. Initially, it was looking like the sellers were going to try to take this down today, and it was just a complete reversal. There's a bunch of news announcements out of OPEC talking about cartels. And, it's just a mess on the news wires. But regardless, crude oil is lifting very aggressively up. And that means that, well, we have a nice bear trend, kind of. Bear spike to the downside. We were anticipating a second leg down. That is what we got. I still want to see it push down to 64.12, but zoom out a little bit further here, right? Don't let the bias fool you. This is a bullish market. So really, what we're looking at here is this an opportune place to buy, or can we keep selling, right? That's what we're really looking at. Because this drive down, let's face it, that's bearish. And sellers are probably going to follow through, and arguably they already have, but are they going to look to follow through again? That's the big question that we need to ask ourselves. And, I mean, in reality, we have to zoom out a little bit and say, okay, well, is this a zone that buyers are coming in on to try to pick it back up all the way up to those highs back at 70, basically 73? kind of. I mean, this is definitely an area of interest. If we look historically back here, we had a huge amount of support coming in across here, and it broke down. Now notice, what's in the way of the buyers pushing up? That level right there. That level smack in the way, not really allowing the buyers to catch it to go up a little bit further. So until we break through that 66.31 zone, technically speaking, we still have the capability of selling. But I have to look at this in another perspective of a lot of traders loving those fib levels, and, well, we're bouncing right at that 50% zone on top of previous support and resistance. So I have a really hard time wanting to continue shorting crude oil. It's in a huge buy zone. The upside objective is massive. I mean, we're looking at, you know, right now it's at 66. We're talking about upside objectives at 73. So we're talking, you know, I mean, an easy $6 to $7 up compared to a downside objective of what, maybe 50 cents to $1. It's just not worth it anymore. So it's just kind of coming off the table a little bit where I'm thinking, well, maybe I don't want to short anymore. It's not looking that good anymore, especially now with this giant bull bar. And we're in an area that a lot of buyers will be accumulating for a bigger move. So that leads me to believe that we are looking for a bull side bias, but the buyers have not proven themselves yet. We are in an area of long-term buying interest. We have a huge bull trend on the 4-hour chart, but the buyers on the faster kind of zoomed in look, they haven't shown up yet. Now this could be the start of it, but really what we want to see is a break back above 66.31, break back above some of these other major areas of support, and then look to pick up that next pullback. And that's kind of what I'm waiting for right now. This is definitely a really good start. Now we need to see some follow through. If the buyers cannot break through that 66.31 and we start seeing them rotate down a little bit, that's where we're looking to say, okay, well, you know, it may not be huge in terms of profitability to the downside, but there is still room to short because the buyers aren't coming in yet. And that's kind of what I'm waiting for. Right now, we're breaking higher, and this looks really strong to the upside, so I'm staying away from shorts. I'm looking for longing opportunities, but I would prefer to see them break above that 66.31 and really start ratcheting it up to give some extra proof. So the game plan right now on crude, looking to buy pullbacks above 66.31. If it starts breaking down or failing that breakout move above 66.31, then, you know, if you want to stay long bias, looking to pick up the lows underneath that at around 64, or looking for possible shorting opportunities to chase that market back down again. Pretty strong reversal, though. Pretty strong reversal. Over on the S&P has had a very nice bull push to the upside. We are breaking through resistance at 84.5. That is gone and looking good. I mean, the buyers definitely owning the market and looking for continuation to the upside does make sense. Of course, I am on the wrong contract. I forgot to roll them over on this screen here. There we go. That looks a little better. So looking for a little bit more continuation. You know, I think the big thing that we're really waiting for here is simply just seeing the S&P pushing into some form of resistance. The next level of resistance that we have is at 28.06. We've kind of pile driven through some of these other areas, but that's the high that was put in early March. Above that, we have the kind of pause before that big old breakdown that happened in early February, and then we have some January levels after that, and then after that, it's all-time highs, right? Record highs gunning for that 3,000 back at 28.87. As it stands right now, the buyers are definitely in charge. We're breaking above a wedge, so I would like to see a small pullback. Seeing a pullback to retest the inside of the wedge would look really nice, even if it's intra-candle, for a bounce back up to see if we can close in on that 28.06 area. 2800 is a big round number. That 800, 900, those 100 levels, something we want to pay attention to. They can pause the market from time to time. So looking for a pullback to retest that channel, or in this case wedge, and then looking for a bounce off of that in continuation. That's kind of the game plan right now. The buyers aren't giving us much of a choice. It's bull side bias only. Buyers are dominating the market. I have no reason to do anything but buy right now, and that's going to be the line that we stick with. New level of support at 78.5, and looking for a quick little pullback. You know, visually speaking, probably around 27.88 would be the area of interest on the next candle. Maybe 89, somewhere inside of there. Just kind of keeping an eye on it from a specific tick level, but that's only applicable for the next candle. Looking good though. Aside from that, everything is nice and strong to the upside. It's a matter of how far they want to go, but definitely looking to pick up some of those pullbacks. On the stock side of things, we had some movers today. NNDM, that's November Delta Mike, Beautiful upside movement here. Huge, huge pre-market gainer. And when the open hit, man alive, this thing went flying higher. If you were in the room with us, you saw us picking up this morning shares below $3.26, or $2.36 rather. Think about flipping those numbers around. And beginning to exit all the way up to 290s, and then finally all the way up to 329 major level of resistance. And this thing is on fire today, filling a lot of major objectives. I've been getting a lot of questions about this on, well, what do you think about it now? Would you jump in now, maybe for an end-of-day rally? No. With these pumps, if you're not in early, granted, it does have news that's causing this, but if you're not in early, you probably missed it. Very infrequently do you see these really ramp up at the end of the day, and if they do, it's usually just to retest the highs. So I'm just not a huge fan of it anymore. I think the move is done. I think everybody left the playground, and they're probably playing with other toys now. So wanted to cover that one quick because I have been getting some questions on it. NNDM, we absolutely killed it this morning, bagging all kinds of movement to the upside, but now, nah, it's off the radar. Not that interested anymore. Now, looking at some of the other larger ones here, of course, Twitter has been on the radar for quite a while. And if we zoom out to something a little bit bigger here, let's go to a, let's look at a daily chart really quick here. So really the daily, ooh, man, that's nasty. Let me load the style really quick here. Default? That'll work, nice and simple. So, I say nice and simple until I zoom out. Well, anyway, we have a beautiful amount of bullish momentum to the upside. Everything is looking really, really good. I mean, it's hard to argue with Twitter. We've been looking at buying Twitter since the dip down at 26s, and now it's pushing into the high of 41. This thing's a rocket ship right now, and I really have no desire to do anything but buy more dips. I mean, it just keeps pulling back and keeps giving opportunities. You got to keep jumping on along with it. Big bull blow off. Really, it's very important in how today forms. Does today follow through, or do they fall flat on their face? That's kind of what we're waiting to see right now. Right now, a small little bear doji like it is right now, or even a small bull doji, that's fine. The thing I don't want to see is a strong bear bar. If you see a strong bear bar, might be some problems there. But a strong bar like this into a weakness like a doji, I'm okay with that. That doesn't bother me at all. I just don't want to see anything that could potentially cause some problems. Not seeing anything like that. So upside still looks pretty good, honestly. Some of the other stocks that have been kind of cropping up, AMD definitely on the radar for some huge momentum. I mean, absolutely ludicrous amount of movement. I mean, the amount of bullish pressure that's been coming into AMD is absurd, to say it nicely. The buyers just, they've been dominating this, and we've been talking again, another one that we've been talking about picking up sub $10, and this thing's just on a tear, up almost 100% from that area. Well, I won't give it that yet. We'll say 60% up from that area. It still looks like it wants to go, and this pullback, I think, is the dip that a lot of buyers wanted. This is something that you see very frequently on heavily bullish markets, really tight channels, not really letting loose. The first time they have a strong bear bar, or bull bar, depending on the trend that you're looking at, that is a buying opportunity that buyers will jump in to try to shove the market back up again. And that looks to be exactly the case that we're hitting right now. So as it stands, AMD is looking beautiful to the upside. See if they can crack back above 16, maybe make a run for 17. Hard to argue with the bull emphasis, though. Looking nice and solid. So give everyone a couple minutes here to type in any markets that they want me to cover for them, and then we'll wrap it up. Again, hopefully everyone's trading day was good. I know we absolutely killed it this morning. Most of it was on NNDM, not gonna lie, but it's a really good day today as long as you were patient. But like I said, give everyone a couple minutes here, type in any markets they may be looking for, and then we'll cover them there. And if nothing pops up, then we'll wrap it up. There. All right. Not seeing anything getting typed in. Perfect. Not a problem. So that'll do it for today. Overall, I mean, I think the big thing really going into tomorrow is there's a lot of waiting. A lot of the markets are in an area that is just not favorable, and making sure that you're not trading around those unfavorable areas I don't know, something like that. Those are the locations that you want to stay away from. And right now, that would be gold, that would be the euro. Waiting on crude a little bit. The S&P is pretty primed, but everything else, there's a lot of waiting going on. So just stay patient, and like we always say, it doesn't matter what market you're trading. Always, always make a plan, trade the plan, follow those rules. You'll be A-okay. Until next time, enjoy the rest of the day. Hopefully you had a great trading day. If you have any questions, send me an email, jbrink@slingshotfutures.com. Underneath the video, click on subscribe. Click the notification bell icon so you don't miss any of these ever again. And we will see you all next time. Have a good one. We'll talk to y'all later.